traders, this is Cousin Vinny coming to you on the weekend with a look at the week ahead. This is a chart of the comp, and as we discussed in the blog post that I sent out on Saturday, we are up above this upper trend line in this rising wedge, and the things that I'm looking for are twofold. One, this 1618 extension up here, which is from this low in June up to this high, where we hit this area of this upper trend line, moved back down, came up to that area again and broke out above it, came back down and tested that area on Wednesday 2 weeks ago, and then bolted higher. So I'm looking for this area here as an area of support. I'm also noting the volume looks pretty good, but the thing that sticks out at me is NAMO is up in the sell zone. Bullish percent is back up at 70. The number of stocks trading above their 50-period moving averages. The comp are at 71.82%. ADX is starting to turn back up after bottoming. So for the most part, the thought is that we could grind along this area here as one scenario, or two, we could come up to this upper trend line and then move back down to an area of support where we broke above here. Secondly, as an area of support down here where we broke out of this high that we saw in August. So that's what I'm looking at for the week ahead for the comp. Now, this is a chart of the S&P 500. Obviously, what I want you to notice is this KIRBY band here above these areas where we broke out, similar to the comp in September, failed, came back down to this lower trend line, bottomed 2 weeks ago, Wednesday, and then we had these three white soldiers. We had a rest day, and then again another three white soldiers up to this upper trend line. So the first scenario I'm thinking of is we flag out here over the next week or two into this KIRBY shelf, and then we bounce and we move higher as we gain some strength. I don't think we're going to see this lower trend line, only because of the amount of volume that's in this area after we broke above same in last week. So that's what I'm picturing going into the week for the S&P 500. Note the 130% up day that we saw on that Wednesday, and followed by some pretty significant gains in up volume versus down volume. Here's another view of the S&P 500 that I use to time inflection points, and also use for entries and exits on some of my 401k funds that are geared towards the S&P 500 type stocks. So here you can see the flag that I'm looking at. The thought is that we could get up to the 1756 area quickly, if not Monday or Tuesday, and then we could flag out here, as I pointed out on the previous chart. Now 1756 down to this lower trend line would be a 4.524% pullback, so that's what I'm watching for. Now here you can see that hammer followed by the three white candles or three white soldiers that I pointed out previously, and that rest day, and then a further three white candles going into this upper trend line. Now note that 2 weeks ago on Wednesday when we bounced, it was on lower volume, so it was a little bit suspect, but then the volume started to pick up, and this looked as a strong bull move, which is the way we finished the week. Now looking at the indicators, which is what I use, I like to see these line up in terms of all green, all red, or when they start to change from one color to the next, I start to anticipate an inflection point. Now as we near this upper trend line, what I'm looking for is bullish percent to climb to a higher level, NYSE to get up to a higher level and look like it wants to peak. Right now we're currently green. NYMO to get up into the plus 75 or plus 80 area for a sell signal. MACD to give me a crossover, which it isn't. ADX to turn back down, which it is not. And also, the thing that I'm watching very closely is the SPX A50R, which is at 83.8%. What that's telling me is 83% of the S&P 500 stocks are trading above their 50-period moving average, which is alarming and typically where we see an inflection point like we saw here in the beginning of the year and also in May where we had that top. So if you're trading long this week, you want to be cognizant of what the S&P 500 is doing because you want the S&P 500 behind your back, obviously. This is a chart of the Russell 2000 Small Cap Index. You'd have to be living under a rock to not see that the Russell 2000 small cap stocks, a lot of them are bolting higher, and you're seeing more traders trading these names. So be a little wary as we reach this upper trend line. We continue to defy gravity, and those stocks continue to rally. Now, I have the 1618 extension up here. I don't think we're going to get up there anytime soon. But it's a possibility that we hit this upper trend line, move back down to an area of support, which could be this area here, down to this low and this high, as an area where we could come down and bounce, where we could conceivably see it move higher up to this 1618. I'm taking this low here that we put in April up to this high that we saw in July and August, where we failed, came back down, came back up, grinded along that area, failed again, and then got back above this area. So I'm looking at this area as to where I'm taking my Fibonacci's and establishing this 1618. The 127 extensions right here, right around this trend line. So keep that in mind. The slow stochastics, I have this set to 5-1. This has been a pretty good indicator for choosing tops and bottoms, pointing them out. Okay. Note that we turned back up this week, so this could get embedded up here. So keep that in mind, like we saw here in May when we continued to move higher and then we finally peaked. Look for this to start to slope back down like we saw here and here back in March and then again in May if you're trading the Russells. I'm trading the RUI, the Russell 1000, in one of my funds, and the chart that I use to do that is very similar. It's the RUI. So that's what I'm using for the Russell 1000 in that particular stock. So you can see the same indicators, MACD, slow stochastics, the Russell 1000 relative to the S&P 500. This is always good to have on your charts to see how the indicator or stock is doing compared to the S&P. Larger caps. This is also a rate of change indicator that I like to watch. I look for peaks correlated with the other indicators to give me an idea when we might see an inflection point. Now this is a chart of the XII ARCA Institutional Index. This is a capitalization weighted index of 75 stocks most widely held by as an equity investments among institutional equity portfolios. The index is designed to reflect the performance of core stock holdings of those institutions. I like to use this chart to watch the buying and selling of institutions as they push the markets around. Now these are the stocks that are in this index and their weightings. And what's significant about this is that if you keep an eye on when they're buying and selling, you can typically anticipate inflection points as well. So short term, we can see that the slow stochastics has turned back down and is back down below 80. So this is significant in that that would be a sell signal for me if I wasn't more in cash than I already am. So I'm noting a momentum here. It's starting to reach an area where it should peak. RSI, I'm keeping an eye on that. And I'm keeping an eye on this indicator as well. Now this is a candle glance chart of the major indices around the world. Note that Europe is really strong going into the past 2 weeks. Hang Seng is pretty much moving sideways, but it's holding its 20-period moving average. Also note the Japanese iShares, EWJ. It had a nice little bottom, came down to this 50-period moving average and bounced with the yen weakness. Also the All World Index, which is the top stocks throughout the world. This is seeing new highs too, but we put in a doji, and it could be an island reversal up here at these highs. Okay, so let's take a look at Europe. You can see these highs that we broke above. Note RSI is climbing higher. Stochastics is overbought, so we could see this move lower on the European Top 100 index. The All World Index is looking a little bit better. We are above and outside of the upper Bollinger Band, which is typically an area where we could see move back down into the Bollinger Bands. If you follow John Bollinger's methodology, the idea is that, which is where institutions define their risk, when we get outside of the Bollinger Bands, that is 99.1%, I believe, of the stock's price action. So the possibility is that, or the probability is that we're going to see a move back down into this Bollinger Band area. We could also climb and grind along this upper Bollinger Band, considering where RSI is now, moving higher. But note we're doing that on decreasing volume. MACD gave us a cross, that's fine. And then we have a standard deviation here, which is climbing. So now let's take a look at some scans. We're going to go down to SAR buy signal. We're going to run that scan. And we're going to take a look at the stocks that did well. We have quite a few here. And we're going to take a look at that list. One name on that list obviously had earnings. We can see that bolt above those highs that we saw at the end of September. Baidu is doing quite well, and I would think this is going to continue. Gap and go. RSI moving above 70. You can see the pocket pivot we put in on Friday exceeded any of the down volume for quite some time. The last time we saw down volume that exceeded what we saw on Friday was this date back in April. So this one's looking pretty good. Note the increase in the on-balance volume on Baidu, and the strength relative to the S&P 500 is continuing to climb. Diana Shipping was another stock that I noticed. I posted this on StockTwits. We had this nice ascending triangle pattern. We broke above it in late August, came back down, and then resumed that move higher in September. Then we flagged out nicely in this descending channel. We came down and tested a pullback to breakout, and then now we're seeing a move above this upper trend line. So this is looking good. If you want to trade this, look for this going, the RSI continuing to climb. Also keep an eye on the Baltic Dry Index, which peaked a while back, but on-balance volume continues to look good. The one thing I'd like to see is more volume here. I'd like to see a pocket pivot that takes out this down volume here. But the strength to the S&P 500 does look pretty nice here on Diana Shipping. Another stock that jumped out on this list was Digital River. I posted this one as well. This would be considered a earnings play, being earnings is after hours and is confirmed on 10/30/2013. Note RSI is climbing. We have this nice 3-month wedge. This is probably earnings here. Last time, which must have disappointed, we see this KIRBY up here, which there's really not that much resistive volume. This was a 52-week and all-time high, I believe. And we could see this continue to move higher off of this level. Now, what I would think is going to happen with stochastics overbought is that we could see this move lower After this, at some point, peaks in the next day or two, Monday or Tuesday, and then comes back down and tests this trend line before resuming higher. And stochastics gets a chance to recycle. That would be my take on Digital River. That may or may not occur before earnings, though, so keep that in mind. This is a candle glance at that SAR breakout scan. You can see AFOP, which a lot of people are trading. That looks pretty good. You draw a trend line here. You can see that we're breaking above that level. We see an area of support down below that we came down and tested again at this 17 area in the beginning of October. And the KIRBY levels up here. RSI continues to move higher. I would think this is going to put in a third white candle on Monday because there's a lot of people trading this particular stock. Note the volume. It hasn't exceeded this particular day here, so we don't technically have a pocket pivot. You want that to occur within 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the 9th day. So technically you want to see a really large volume day. If you start to see volume exceeding the typical 60-minute chart early in the morning, that would be a signal that we could see a follow-through on a move higher. So check out your 60-minute chart on Monday. You can see this flag out perhaps in the morning and the EMAs catch up. That would be nice. Let's enable some pivots. Take a look at that. Okay, you can see where our last week's pivots were. So these will reset higher on Monday. Eagle Materials is another stock in the SAR scan. Connecting these tops, you can see that we had a nice little triangle pattern here that we're breaking above. Finisar also had a nice breakout above this level here. Note the KIRBY level. And RSI continuing to move higher, showing nice strength. But note the pocket pivot on Friday and the accumulation of volume here. On balance volume continues to cruise higher, as well as Finisar's relative strength to the S&P 500. So this is looking really good. The trend is pretty strong. Note that ADX is above 30. LinkedIn also showed up on the SAR breakout scan. Now I enabled SAR indicators so you can see what this indicator gives you. It works best when a stock is trending. In this case, we trended and then we consolidated. You can see the SAR stays under price as we're moving higher and stays above price, like we see here, as we're moving lower. The idea is once we break that downtrend, it gives you a breakout signal. And that's the purpose of this scan. You can see where we broke out above this descending SAR pattern, and we should continue to move higher. So that's LinkedIn. We want to see more volume, of course. Pretty expensive stock, but they have a pretty solid business model for business people and businesses in general. It's basically an online location for where you can network with people in your business or have interests in your business area. So that's LinkedIn. Netgear, another stock on this SAR buy signal scan. My target, short-term target, would be up here in the 33, 34 range, 33.5, 34. As a first target, note RSIs continue to move higher, and we have this KIRBY level up here that we have to deal with. Once we get above that level, this could be smooth sailing for the most part up above 34.25. Okay, but what I'd be looking for here is a move back down to this 10 EMA, which is holding price in a nice bullish fashion. We had a crossover here, we moved sideways, moved back down below the 30-period moving average. Now we had another bullish cross, and prices continue to move higher. I'll be trading mostly technology stocks and XLK, and also some cyclical stocks this week, more than likely in XLY. I'll also be watching XLF, because those are the three that I think are going to outperform going into the year end. Alright, so that's Netgear. Sohu is another one of those stocks that showed up on the SAR buy signal scan. This is probably one of the last stocks I'm going to cover. I am not feeling that well, so I'm going to take a break. But with Soho, note that RSI is moving higher. Note the KIRBY level up here, where we broke above this basic sideways channel. We're holding the 30 period or the 10 period EMA, and we're consolidating right here underneath this breakout level. So note volume is continuing to increase, and we also see on balance volume increasing as well. With respect to relative strength to the S&P 500, this continues to climb. So Soho's looking pretty good as well. It'd be nice to get a pullback inside of this candle on Monday for an entry. I would use the 5-minute R1 strategy. If you're not familiar with that, you can always go to my site and check that out. Okay, at theclosingprint.com. Just go down to strategies and then check out a 30-minute opening range. And you can also check out tutorials where we talk about the 3 main ways that I use to get into stocks. This down here is what HCPG uses for a lot of his trades. I put it together with a 30-minute opening range, and you can see that video right here. The way I determine entries using shorter time frame charts. Okay, so this is Cousin Vinny coming to you from Day Trader Bootcamp, as well as theclosingprint.com. Obviously, come and check us out. These are my stock twits and Twitter handles, and you can also check out the watch list that I post every week here on the right column. Okay, so take care. I hope this helps, and we'll see you on Monday.